Hi everyone, this is Martin here, and welcome you all back to another trading week. We're going to be covering the week from February the 8th to the 12th, and hopefully you all survived last week's trading. Volatility really was the game changer for last week. I mean, not only the prior to last week, not only did the Bank of Japan surprise everyone with their negative interest rate cut, but I believe the prices all reversed for a lot of the major currencies and some of the other cross currencies, and I think that also surprised a lot of traders as well. Not only was the reversals of the price direction very apparent, but it was the volatility, the magnitude, and the momentum of the reversals of price direction that kind of caught, I believe, a lot of surprises, a lot of traders, and surprised a lot of traders by a wide margin, and I think that probably caused a lot of headaches, anxieties. Some traders probably lost some money, but again, I keep telling everyone, if you have your proper money management in place and you have your stop losses in place, there's no reason in the world you should really go to bed worried about what will happen. And I mean, that's the way to trade really is with keeping the proper money management and stop losses to keep you out of the really bad trades, especially when prices reverse for almost no reason. And that's the best advice I can give you. So that's, the key to this week, volatile markets giving you clues to price direction. I mean, a lot of the currencies have reversed, and we're going to take a close look at the technicals, and we're going to start with the very first pair. Obviously, that is the Euro USD. If you've been following my videos for a long time, we always start with the Euro USD, okay? Okay, here we have the Euro USD daily, and previous to last week, this red vertical line indicates the close of the previous Friday, and so you can see ahead, after the red vertical line, we have 4 bullish price bars with some tremendous volatility to the upside, and then on Friday we closed with a black bearish bar, and the last week basically I said we were in an ascending triangle, okay, and again that's shown here by the upper trend line. Here's the lower trend line and the pink magenta lines right here, okay, and you can see we had a breakout of this ascending triangle, and normally with an the ascending triangle, I'm sorry, was here's the top right here. I left it on the charts from last week. So here's the tops. You can see price tried to break out here, tried to break out here, retested the top here several times before breaking out. The ascending means that the lower lows are becoming higher. So here's a higher low to the previous low here. Here's a higher low to the previous low. Here's a higher low. So that's what we mean by an ascending triangle. Finally, price is squeezed between the lower rising trend line, the rigid resistance area in the horizontal gray shaded area here. Finally, boom, like a rocket ship, price breaks out. And if you would have gotten in right there at the next candle, you would have made some pretty good pips, okay? However, Friday ended up with the black bearish candle. So where does that lead to next? Well, I believe we're in an uptrend. We should, the Euro USD should be going a little bit higher. Last week, the euro was one of the strongest currencies, and the U.S. was one of the weakest currencies, despite not all the negative news. I mean, there's some negative news, but the euro against the USD was very, very volatile, very strong. And I believe we're going to continue with the uptrend. However, wait for a pullback. So my recommendation is wait for a pullback, then look for buy continuation trade. Okay, so that's the Euro USD. The MACD here you can see is above 0. Now we get to the British pound USD daily. Okay, and again, last week we had an huge bullish white candle here, which was the Sunday, Monday trading. Then we had a bit of a pullback right here, but a bit of a pin bar, still indicating it was slightly bearish, but not enough um, indication to really say that price is going to reverse back down. But again, the next day we had a huge bullish up candle. So again, price seems to be going higher. However, price is now stalled at the 2015 low, which is the 145.64 area. Okay. Now last week we said we were in a sideways range. Okay, we emerged out of the sideways range, and the price went higher. I did say counter trend trade above 144.20, which was right about there. So if you would have taken a counter trend trade above the 44.20, you would have made some really good pips. Okay, I've got that marked here. And then watch for price to bounce off support. Okay, and price actually did bounce off support and went much higher. So if you would have taken a buy limit order there, that would have been a great opportunity as well, even though the MACD is below zero. But here you can see the histo bars are rising, and that means that the downtrend is losing steam. However, this kind of concerns me right here. This bearish candle right here, bouncing off the resistance. We had kind of a doji the previous candle before that, a big bearish candle after that, and because we're caught between the upper 50 SMA, the 21, we were basically in no man's land. So this week I see price going sideways. You basically have to wait for evidence, either evidence to the downside to break below this area right here, okay, or evidence to the upside, and you've got to wait for price to come up above this area, not only just here, but above this area. So for this price to go higher, for the GBP USD to go higher, price would have to be above the 46. Would have to close above the 46.80 area, okay, before you can even consider price going high. But I believe price is actually going to go a bit lower first, and I believe long term, the British pound is weak currency. I believe long term it's going to keep going down lower, okay, to retest the previous lows. Now we come to the Australian USD. I'm going to squeeze the chart in a little bit. You can see price was in a huge kind of a channel, down channel with that's designated with the upper blue line, the lower blue line. Price came down to here, went all the way up here, retested the high here, came back all the way down here, came back up here, and had a major bounce to the downside. This is really telling because that's a huge major bounce off the resistance area. Price also closed below the 50 and also closed below the 100 moving average. However, again, we're stuck in nowhere's land right here. So I believe this week sideways is the name of the game. Prices may come down a little bit lower. Um, but again, here is a trend line I've drawn in with this pink magenta line. You can see that. So price may come down a little bit lower, then bounce up, eventually may break to the downside. Now, the Australian dollar is one of the weakest currencies. I actually expect price to come down much further to again retest the 2015 low right here. Okay, last week we had a counter trend caution, um, and instead, here's last week counter trend, meaning price to go up higher. It went down lower first. Um, Watch for pullback and the bullish evidence. It actually did pull back, and we had bullish evidence. You still could have gotten in right there and made some pips, so that would have worked out for you. And I did mention watch for price to go higher. This was last week's and then watch the bounce off resistance. So it did go higher. It did bounce off the resistance perfectly, as I mentioned here. And the resistance I had drawn, just again to reiterate, I had drawn a trend line that touched this high here, touched this high here, extended here. This is the area where I expected the bounce, and it certainly bounced back in a big way. MACD is just slightly above zero, but you know what? It's too close to the zero level. Right now, we can expect price to go sideways. You have to wait for further evidence. Wait for further evidence, either to the downside or to the upside. But right now, it's price is just going to be going sideways. Okay. Now we get to the New Zealand USD pair. This is the daily chart again. Here's the previous week on Friday, closing right here with the red vertical line. You can see again, this price moved up like a rocket ship and hit the resistance area right here, and then had a major bounce back, just like the Australian dollar. So, um, again, this is interesting. This would give me cause for concern. I'll talk about that in just a second. Last week, right here, we were in an ascending triangle. Okay, again, this was another. So last week we were here, and remember, the ascending triangle means that the lows were becoming higher. So we have a higher low to this previous swing low, another higher low here. Price was edging up higher, but was not breaking this gray resistance area right here. It was not breaking through. You can see how many times it came close. Finally broke through. This is a breakout of the ascending triangle, okay? And but now it's reversed back in a big way. So again, I did say last week that we were going to have a breakout to the upside. Just wait for that. If you would have gotten in right there, again, that would have given you, well, would have closed, 57 pips. If you're trading at the end of the day or at end of day trading, I mean, you always have an option of closing the trade at the end of the following day or letting price run. But again, you have to take half the profits off the table. So even if you got in right there and price went up to here, and at the end of the day, the following day you saw it price closed here, that's good for 63 pips. So what you would have done is you would have moved your stop loss up, okay, and taken half off the table. So at least you would have gained 63 pips on maybe half your lot size. And you would have, with the next day, on the Friday, reversed right back down, would have taken out your stop, but you still would have had some profits. Okay, and that's what we mean by that. So here again, I see sideways where price is closed below the 50. It's closed right almost just above the 100. So again, you're going to just have to wait and see what happens. I would not get into any trade right at this point, not for this pair anyways. However, the New Zealand and Australian dollar are great currencies to trade against other cross currencies. And near the end of this video, stay tuned. I'm going to show you some great opportunities involving the New Zealand and Australian dollar. Okay, so carrying on, now we've got the USCAD. Well, this was one of the big surprise movers, especially after the Bank of Japan decision on their interest rates. I mean, the U.S. dollar just weakened, and tremendously weakened last week. However, we had this major bounce up. Now, notice we've got a pin bar, kind of a bullish hammer here, or a pin bar. And combined with this engulfing bullish candle, this was a huge jump up. So combined, those two candles to combine together indicate that price may or most likely will go higher. However, we are at a confluence of a lot of resistance areas. We've prices now at the 8 EMA moving average. Um, Here's the 50 prices right touching the 50 moving average. We're close to the resistance area here. So again, this is a wait and see situation. We're still in the counter trend because the overall trend is up. Let me just zoom out a bit. Okay, so you can see the overall trend is going higher. Okay, and we're still making higher lows here. This is a previous swing low. Here's another or the recent most swing low. This is still higher than the previous swing low, so we're still going higher. However, this is a major counter trend, and are we seeing the start of a bounce where price is going to go higher from here on in? I don't know. Again, it's a wait and see situation. Okay, so um, this this line right here is a medium trend line. Okay, right here, it's a medium term trend line. So price could still come back down to here and then bounce higher. Okay, um, but again, it's a wait and see. Let's zoom in again. So for this week, for this, and I'm sorry, last week here, you can see I said we were in a counter trend sell continuation. If you would have waited for price to go a little higher, taken a sell limit order here, you would have made some huge pips. Let's just take a look. You know, good for at least 319 pips last week because this was one of the major movers last week. So that would have been a great opportunity for you. Okay. This week, though, for price to continue going higher, I would wait until price comes all the way up to this resistance area in gray. So price would have to kind of close above the 150 or I'm sorry, 141 20 area. Okay, for price to for me to even consider a trade to the upside. So you'd have to wait for price to come all the way back up to here, or wait for price to look for bearish activity for price to come below here, and price then most likely will come to retest the 100 SMA and possibly this trend line right here. Okay, so again, wait and see for this pair. The MACD has just gone below. I'm sorry, it should be below zero. So the MACD is now below zero. So we're still in a bearish overall downtrend, but just wait and see. Okay, and again, I'm going to switch to the WTI oil daily chart. Okay, this stands again for West Texas Intermediate Light Sweet Crude Oil. You can see last couple of days, last week, price on oil went down. When price on oil goes down, that means the Canadian currency is generally getting stronger, and that's why we saw the Canadian currency or still getting stronger against the U.S. On this pair here. Last few days, U.S. lost a lot of strength against the Canadian currency, but now it's rebounded. So again, it's a wait and see situation. If oil continues to keep coming down, and here's the thing: when it comes to watching the U.S. CAD pair, if the um, if the oil price continues to come back down to here, even lower, and the equities and the stock markets in the U.S. Keep selling, then the U.S. currency will gain strength against the U.S. CAD. And that's just the way that works, okay? Next one, U.S. Swiss franc, another huge downfall for the U.S. against the Swiss franc. Last week I said we were in uptrend continuation, and there was absolutely, and I said there was no retest of the 215 high. I actually thought when price is here, price is going to come up and retest the 2015 high. Normally, currencies do that. They do retest major previous swing highs or lows. In this case, it didn't, and just dropped like a rock. So I believe this currency pair probably caused a lot of confusion in the markets, and a lot of traders lost some money on this one. So this was a big surprise here. And I also mentioned last week, wait for a pullback for buy limit order above this price here. It never pulled back. It just kept dropping. So because it did not, yeah, you would have lost money if you would have actually placed a buy limit order. However, if you would have just waited for a bullish evidence to the upside, you would not have been involved in any trade. Okay, so there's always two ways to play when price is moving lower. Either place a buy limit order and then make sure you use a stop loss if price just keeps going in that one direction and not in your direction, or just wait for bullish evidence to the upside. Now this week, uh, we're in a downtrend. Okay, obviously we can see we're in a downtrend, but caution. Okay, because we are close to a another major support area in this gray rectangle, and my suggestion is sell stop below the 98.74. Okay, and so that let's just take a look where that is. 98.74. 98, yeah, so right about there. So just below the wick of this bearish candle, you could set a sell stop below 98.74. However, set a very tight uh, take profit, so that when price hits close to here, you want to be able to get out of the trade, because most likely once price comes here, it's going to bounce higher again, and that would then you would then lose your profits. You do have a chance to make somewhere around about 40 pips, not a lot. So this is just a short term trading opportunity. I mean, price may come down lower, you maybe for 40, 50 pips. But again, you can expect price to come down and bounce back up. So if you do want to take a trade like that, the sell stop below 98.74 with your stop loss, it would, in this case, I would put it right about there around the 90, 99.45, 99.50 area in case price comes all the way back up. But then you're stopped out, and again, you can go to bed without any worry. Right now, the MACD histo bars are dropping rapidly, which means that we could be entering a new phase downtrend. Okay, and you can see prices recently broken. Um, uh, broken this channel right here with the upper and lower pink trend lines. Okay, so price did break down, it's broken down a little bit lower, so it seems like we are in a the downtrend is going to continue, but just caution, there's not much room to the downside. If you want to place a small trade, you can do that, and make sure you have a stop loss in place. Now we come to the USD Japanese yen. This was one of the biggest surprises. Look at that. Now that if that's not volatility, I don't know what is, but this is bearish volatility. I mean, price dropped in total, boom, 429 pips. So that is pretty amazing. Okay. Again, last week I said we were in an uptrend. I mean, obviously, look at this big, huge candle to the upside. Uh, Now, here's the thing. Let's look at this. Here's a huge candle to the upside. This was on the Friday of the previous week closing. And again, normally you would wait for price to come back, pull back, and then look for a buy opportunity. So price never presented a buying opportunity because there was never a bullish candle. There was a bearish candle, bearish candle, bearish candle, bearish candle. So there was not one bullish candle to indicate that price was going to continue going higher, right? You see that? Okay. However, if you would have placed a trade, let's say right at the beginning of Sunday, Monday, the stop loss then in this case would have been right underneath the 50 SMA, right there, or even down to here. So yes, you would have lost some pips, but you would have been out of the trade well before dropping for the next few days after that. So always consider where your stop losses go. Usually at the next below the next, in this case, a bearish stop loss to the downside. You want to make sure it's below a previous support area. It could be a dynamic moving average like this, like the 50, or this gray rectangle could have been right down there as well. Yeah, you're going to hurt in the short term, but you're going to get out in the long term unscathed, knowing that most of your capital is still in play. And also the other thing, everybody, I really reiterate this: trade within your proper lot sizes. So if you have a small account, let's say anything under $500, you're going to be trading micro lots. Okay, if you got anywhere between $500 to $1,000, you're still trading micro lots, maybe some small mini lots. Once you have between $1,000 and $2,000 or more, you can consider mini lots only. But you know, you really have to watch your lot size. Okay, so where are we today? Well, you can see prices come back down. We've we've retested the 2015 low. Now, I believe price may still come back down a little bit lower, maybe come back up because it's retesting, or it may break right down through. And uh, here's the thing: you can take a sell stop order below this level right here, okay, and that is somewhere below 115.70, 75. Okay, so if you want to take a sell stop, because I believe price is still going to go down much further. Once it gets past here, it's going to go down still for another while longer. However, you just can wait. We could be going sideways for a bit. Price may bounce right back up. So again, it's a wait and see situation. Also, here's a double bottom. Quite often when price makes a double bottom, price bounces back up higher to the upside, and then price would come back down, come right back up to this area here. So there's a lot of opportunity possibly, but I would wait and see for further evidence. Okay, now we're going to talk about some other pairs. We've got the CAD Japanese yen. Last week I said we're in a counter trend, caution. Okay, here's the counter trend. Last week we were here, and caution. The reason I said caution because price was already at the resistance area, and so if you would have waited for evidence, then you would have seen this bearish candle bounce off the resistance, and you could have taken a trade to the downside. So the other thing is wait for pullback, buy limit order. It pulled back here on this candle on the Wednesday, but then you know uh, um, uh, yeah, but well, when I say buy limit order, I mean you're placing a buy limit order above the next support area, which is right here. So you would have made some pips, but again, the next day after that, price went back down to the downside. So this week we're in an overall downtrend. You want to wait till price pulls back a bit and then sell on a pullback. Okay, so that's what I see here. MACD is just slightly below zero. If price continues going further down, you've got a lot of pips, around 100 pips, 120 pips to go, okay? But again, wait for a slight pullback. If you want to, you place a sell limit order halfway of this the candle's range right here, okay? Or just wait for further evidence. Then we've got the British pound, Japanese yen. Now, last week and all for the previous week before that, we were in a bear flag. By that I mean the trend is down, price is pushing higher, pushing higher, pushing higher. The lows are becoming higher, 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 and then finally price breaks out to the downside. And I think we've got a long way to go in this. So um, uh, last week I said we were wait for a pullback and then look for buy evidence. That never happened at all. There was never any buy evidence. Well, the buy evidence was right here, but it did not really pull back. So the close of the previous Friday, it was right here. You see this white bullish candle. So waiting for a pullback means that you're waiting for price to come back down and then looking for buying evidence. So this kind of this price just kind of gapped up higher and then came right back down. And with this bounce, with this bearish candle, I would have gotten in right there for a sell trade. Okay, so this whole pattern worked out perfectly as far as a bear flag is concerned, because once price breaks out, price just keeps going to the downside. And here, this week, I see we're still in a downtrend. It's going to downtrend continuation. Again, sell on a pullback. So always waiting for price to pull back just a wee bit. In this case, maybe pulling back to the part of the daily range here, halfway up the candle here, or just waiting for a complete breakout to the downside. MACD is below the zero level. Now, here are some other pairs I mentioned at the beginning of the video that you could look at. These are new pairs. These are called cross currencies. The Audi last week demonstrated one as it became a very weak currency toward the end of the week, and Japanese yen obviously was a strong currency last week. And so here, um, with this huge bearish candle, it broke the trend line, and this is very consistent with our trading strategy, the swing pullback strategy. Okay, so price is now below the 21 and it's broken a trend line. You can get in here at the open of the next candle. However, I would wait. Always wait till there's a bit of a pullback, maybe to about here. Wait for a pullback, then take a sell trade. And similar, we've got the New Zealand Japanese yen. Again, you can see similar to the what you learned in the first course, the swing pullback. So price pullback was in a major downtrend. Price pulled back in a big way, and now price is broken back down to the downside, and also breaking the upper trend line here. So again, sell on a pullback, waiting for price to come back a bit and then selling. Okay. And finally, I think we have one more pair. We've got the euro, Australian dollar. The euro was one of the strongest pairs toward the end of last week, and the Australian dollar one of the weakest. Is weaker, and look at that. We've got another classic uptrend, pullback, and then a breakout. And this is the swing pullback strategy that you learned in the first course. And you can see that this broke out really nicely. However, because of the volatility of the breakout, wait for pullback, wait for a pullback, and then take a buy trade to the upside. Your stop loss would be just below the candle here or just below the 21. Okay, and again, MACD is above zero. So hopefully you enjoyed this video. Hopefully you're learning. And again, I'm waiting for your questions. If you have any questions on any of the currency pairs discussed this week, feel free to send them in to me. I'll be more than happy to discuss your trade opportunities. So for this week, happy trading, everyone, and we'll talk to you again soon. Bye for now.